Are you tired of watching your hard-earned savings barely grow in your traditional bank account? You're not alone. Millions of people are stuck in accounts earning next to nothing, while inflation eats away at their purchasing power. But here's the good news. It doesn't have to be this way. We'll explore simple steps you can take today to make your money work harder for you. We're talking about strategies that can put more money back in your pocket without taking on unnecessary risk. First up, let's talk about high-yield savings accounts. These accounts are offered by online banks and credit unions, and they typically offer much higher interest rates compared to traditional banks. Why? Because online institutions have lower overhead costs, they can pass those savings on to you. Switching to a high-yield savings account is one of the easiest ways to start earning more on your money. Online banks are just as safe as traditional banks. They're FDIC insured, protecting your money up to $250,000 per depositor. You can often open an account online in minutes, and transferring your funds is a breeze. Many online banks offer features like mobile check deposits and bill pay, making managing your money seamless. So if you're ready to break free from low interest rates, a high-yield savings account is a fantastic place to start. Let's move on to certificates of deposit, or CDs. You're lending a set amount of money to a bank for a predetermined period, and in exchange, they guarantee you a fixed interest rate. The catch? You generally can't touch that money without incurring a penalty until the CD matures. CDs often offer higher interest rates compared to high-yield savings accounts, especially for longer terms. If you have some money that you don't need to access for a while, a CD can be a great way to earn a higher return on your savings. Shop around and compare rates from different banks before you commit. Up next, we have money market accounts, or MMAs. These accounts offer a nice balance between earning potential and accessibility. Think of them as a hybrid between a high-yield savings account and a checking account. MMAs typically offer higher interest rates than traditional savings accounts, although they might not be as high as some CDs. They often come with check writing privileges and debit cards, giving you more flexibility to access your money if needed. MMAs are a great option for those who want a competitive interest rate but also need some level of liquidity. They're ideal for emergency funds, short-term savings goals, or even just managing your day-to-day expenses. Now let's talk about government-backed savings options like Series 1 savings bonds and Treasury bills. These investments offer the security of being backed by the full faith and credit of the United States government. Series 1 savings bonds earn interest based on a combination of a fixed rate and an inflation-adjusted rate. Treasury bills, or T-bills, are short-term debt securities issued by the U.S. Treasury Department. Both I-bonds and Treasury bills are considered to be very low-risk investments and can be a great addition to a well-diversified portfolio. Plus, they're exempt from state and local taxes, which can save you money come tax time. The financial landscape is constantly changing, and you want to make sure your money is working as hard as possible. Make it a habit to regularly review the interest rates on your savings accounts, CDs, and other investments. Many online banks and financial websites make it easy to compare rates. Think about setting up automatic transfers to automate your savings and make sure you're consistently contributing to your financial goals. Remember, even small, consistent contributions can add up to significant savings over time. Earning more interest on your savings doesn't have to be complicated. By switching to high-yield savings accounts, exploring CDs or money market accounts, and utilizing government-backed options, you can see your savings grow faster. It's all about being proactive and finding the strategies that align with your financial goals. Take action today and let your money start working harder for you.